Shares of Robinhood have jumped over 14% on Monday. That's after an announcement late on Friday that the company was going to be added to the S&P 500. So what this ends up doing is it ends up bringing buying pressure into the market. So there's over $2 trillion worth of ETFs that just copy the S&P 500. So when there's changes to the S&P 500 list of companies, they're going to sell one company and buy another. For Robinhood and the size of the company, this is a market-weighted index. The S&P 500 is weighted based on the size of the company. So at about a $90 billion company, there's going to be about $3 billion worth of buying pressure for Robinhood shares. That's what's helping push shares higher, not only the buyers that have to buy it, but also the people who are speculating on those buyers coming into the market before the changes officially occur on September 22nd. Let's dig into everything that's going on today. These changes happen every once in a while, and this is a nice tailwind for Robinhood. This isn't the reason I own shares, but it is a nice day to be a shareholder of Robinhood. So let's dig into it. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the official announcement from S&P. These are the major changes. Actually, there's a number of changes that they announced on Friday. Uber Technologies is going to be entering the S&P 100, another stock that I own. So nice little boost there for them. But the S&P 100, not nearly as closely followed. It doesn't have nearly as many ETF assets as the S&P 500. The more notable news was AppLovin, Robinhood, and MCore are going to replace MarketAxess, Holdings, Caesars, and Enphase in the S&P 500. These changes are going to take effect on September 22nd. So that's when they will officially take effect in the index. Remember, the index is not actually a pool of money. The index is literally just following these stocks. So they build this index, and then the assets actually behind it is ETFs that say, you know what, we're going to follow this certain index. So this is what's a little bit goofy about this business, is that the S&P 500 is just like a proxy, and it's the ETFs like VOO, like SPY, they're going to be where assets are actually coming into the market and buying Robinhood. So that buying pressure is going to take place between today, September 8th, and September 22nd, maybe even a little bit after that, when those funds, they're going to have to buy about $3 billion worth of Robinhood stock. Let's get to how I got to those numbers. This is a list of all of the companies in the S&P 500 and their weights. So 7.1% weight for NVIDIA. And it all goes all the way down to much, much smaller companies where Robinhood is going to fit from its market cap perspective. And remember, that's what's important, is how big is the market cap. Their market cap, as I'm recording today, is about $89-90 billion. They're going to fit somewhere in this range. So the calculation that I use is a 0.15% of the S&P 500. Then if you look at the biggest ETFs, and I only look at these three, the Vanguard S&P 500 ETF, iShares, and Spider ETF. So these three alone are going to have a little over $2 trillion worth of value that they're going to have to then allocate 0.15% of that money into Robinhood stock. That's where that $3 billion number comes from. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So that's going to be that buying pressure in the market. And these are just market dynamics. This is supply and demand. So demand just went up for Robinhood shares, and that demand will at least hold over the next few weeks and be sort of in excess of what it would normally be. Then things will likely normalize. You may see a jump in shares now. It may fall back a little bit later in the month, or maybe even in October. Don't really know exactly how this is going to play out. But for now, for today, maybe even for the next few weeks, that's the buying pressure that's coming into the market. And the reason that Robinhood is being added to the S&P 500 is this is now a very big company that is indicative of what's going on in the overall economy. So that's what the S&P 500 is trying to track. Let's just go through some of their recent numbers, because this is why I own the stock. Is their operations have gotten much, much better over the last few years. Their funded customers now up to 26.7 million. Assets on the platform, nearly $300 billion. They're rapidly improving their equity notional volume. So this is basically going to be the volume of stocks that are traded, options that are traded, and crypto that are traded, all rising pretty rapidly and steadily over the last few years. This is no longer a company that's just the YOLO platform that it was kind of in 2020, 2021. This is now a company where they have a lot of retirement accounts. That business has grown about 9x over the past 12 to 18 months. So a much bigger, much more mature company. They're also getting into credit cards, the Robinhood Gold Card and the Robinhood Gold subscriptions have been a very, very successful product for them. So that's why their economics have improved. Their revenue continues to grow in excess of 50% year on year. And that's going to likely continue, maybe not quite at that level, but unless we go through some sort of major downturn that brings the volume of trading down pretty precipitously, I think Robinhood has a lot of momentum behind it. The other thing that I'll highlight that I wrote about recently is prediction markets. Online sports betting has become a huge business with companies like DraftKings, but it's actually more efficient for people who are making those wagers to do it with prediction markets. And prediction markets are early in their rollout on Robinhood, but you have companies like Polymarket and Kalshi that are now legal in the US or being launched in the US because the CFTC has built rules around them. They're allowing these are really futures contracts. They're not just betting contracts. They're futures contracts that pay out exactly like any sort of other futures contract. And they're going to be able to basically make a contract on anything, including sports, including economic results. So going to be really interesting to see how this grows on the Robinhood platform, because I think you could have a lot of that sports betting activity actually come to Robinhood. That really expands the potential portfolio of products and revenue generation for Robinhood going forward. So look for that to be another growth driver for the company. But for today, the big news is that Robinhood is joining the S&P 500. That's bringing more buyers into the market. That's why you're seeing the stock up. Fundamentally, the business has not really changed, but the supply and demand for the stock has. That's why you see this kind of reaction. So let me know what you think about Robinhood stock in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.